Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the SALT Conference in New York City. Joining us for this segment, we have Jen Prosek, founder and managing partner of Prosek. We're going to discuss the emerging market of marketing and why CEOs and management teams should prioritize a proactive comms strategy. Jen, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me.
From your work with CEOs and companies across the financial services spectrum, many of which are here today, what are the trends that you're seeing in PR and marketing?
Well, as you know, we call this space the emerging market of marketing because a lot of financial institutions, especially in the private markets, have not really gotten on board to sophisticated proactive marketing and reputation management, but that is happening like a tidal wave. So I call it the emerging market of marketing, but we're probably 60% through that emerging markets. I think the private markets, asset managers, and obviously large financial institutions know that brand matters. So that's why they're getting on stage, they're talking to folks like you, and they're making sure folks are aware of their distinct advantages.
Why should CEOs and their management teams prioritize a proactive communication strategy?
It's really about the acceleration of business goals. You know, we always say in this market, most CEOs care about talent, deals, and capital. They want the best talent, they want to raise money, or they're out of business, and they want the best deals. If folks know in the market what you stand for and you have a healthy brand and they already know your story, I always say you're having the second meeting, not the first. It's just efficient. Whether you're meeting a new LP, when you show up to the meeting and they know who you are, what you stand for, and they're positive on the company, you're more likely to close your deal faster.
Yeah, particularly in this environment.
Yes.
Of course. You just moderated a panel with the top institutional allocators on the street. What were some of the key takeaways?
I think the key takeaways are everyone's still predicting that recession we keep hearing about that never actually lands. A lot of talk about the banking system failures and how to manage cash and how the management of cash is now an issue for all institutions. Talked about portfolio allocation. Good news is private markets is still hot. A lot of them, like New York City pensions, are now able to allocate more to private markets than they're planning to. And one of the interesting things Liz Burton said was, you know, if you're based in the US and you're not traveling to see what's going on outside the US, you're failing in your sort of fiduciary responsibility as an investor. So get off the sidelines and get out and see what's actually happening in the world.
That is a consistent theme that we've been hearing on the show
Yes.
as well. What is your outlook for private market firms?
So I think private market firms are healthy. Some of them are having more trouble than they would in another market with their fundraisers, but they're actually getting to the finish line. So it seems like a relatively healthy market to me.
All right, Jen, we appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.